Good day, subscribers. Thank you so much for joining me today. I am Jeremy. This is the Financial Education Channel, and today we're doing episode 1 of a brand new series called Is It a Buy? Is It a Buy? Where I break down one stock each week or every other week, and I decide if a stock is a buy. It's either I'm buying it or I would not buy this stock. And today we are doing Netflix. Netflix is the very first stock we are doing. Now, for future reference, how I will decide what stock I do the following week, I will decide it by someone that puts something in the comments that is a particular stock. So I will pick a random winner each week to decide which stock I break down. So you guys need to leave a comment on which stock you want to see broken down. Say any stock out there you want, as long as it's not a penny stock or something like that. If it's a penny stock, I'm not going to break that down, I'll be honest. But pick any type of real company, put it down there, and I may choose it. I'll choose one of them randomly every single week. So go ahead and do that now, and you have a chance of winning the grand prize, which is me breaking down that stock next week. Let's go ahead and get into Netflix now. On your screen now, you should see a About Us section. Now, someone came to me and they said, hey, you should check out this Netflix stock. I think it's a good one. So I need to go check out this Netflix. Now, we're going to assume that I've never heard of Netflix. Obviously, I know Netflix. I've heard of them and whatnot, but we're going to act like I never did. So I need to go to the Investor Relations tab on Netflix.com, and then I need to look at the 10K form, the annual report. So I went ahead and did that, and now we're in the About Us section, and we see Netflix is the world's leading internet television network with over 75 million members in 190 countries. So right off the bat here, I know they're a streaming service of shows and movies and all those kinds of things, as you can read all in that first paragraph. I know they're in 190 countries. That's quite a few. And they have 75 million members. That is quite a few. So as we kind of go along here, they talk about their strategy and whatnot. Yeah, that all's good. Now let's go ahead and read that last paragraph there. We continue to grow our streaming service both domestically and internationally. We began our international expansion in Canada in 2010. So they've only been expanding internationally for about 6 years. So that's what I take so far from this paragraph. We launched our service globally with the exception of the People's Republic of China and other territories where U.S. companies are not allowed to operate. So that's a big thing. That's a big thing for two ways. That's really sad they cannot get into that market yet because China is a huge market. We're talking about 1.3 billion people. We're talking roughly 600 million in the middle class and always expanding, fast growth. That's a huge market that they're not in right now. But it's a potential opportunity in the future if they can get in the Chinese market. That's huge. But if they can, then that limits their growth substantially. It really does. So let's go on, and now on your screen there, you should see a competition. A competition section is always located in the annual report, and here it's basically talking about the market for entertainment video is intensely competitive. Yes, we know that, subject to change. Internet video providers, blah, blah, blah. That's all great. As far as competitors, I don't see a lot of competitors for Netflix, I'll be honest. The old competitors for Netflix were Blockbuster and Hollywood Video, things like that. Those all went out of business. There aren't a ton of streaming services out there. There are things like Hulu, which is a show type streaming service. Then you can buy actual just movies on, like, say, Apple, or Google Play or something like that. There's not a lot of competition for Netflix. They really have the market cornered. They're almost like a kind of a monopoly in the streaming service. So as of right now, I'm really liking Netflix. As of right now, just judging off the business so far, I'm really liking it so far. They have a huge opportunity. They're almost like a monopoly in their space. They're dominating it. They don't have a lot of competition, in my opinion. So right now, I'm liking it so far. Next on your page now, there's a category called like risk factors, and it lists all types of risk factors for that company could face. Now this one I have it highlighted on. This is very important. We rely upon a number of partners to make our service available on their devices. Now, what does that mean to me? What that means is Netflix has to be streamed through either a device of some kind, an iPad, an iPhone, an Apple TV, some type of Google device, Android, something. Netflix doesn't have its own, device that you can actually watch it on, its own TV or something. You have to stream it through a device. So, this is big. What if, say, Apple wanted to get into Netflix's business? They said, you know what, Netflix? Screw you. We're not going to have your app on any of our lists anymore. You're not going to be featured. We're not even going to allow your app to show up on the App Store anymore. Imagine how that would kill Netflix's business overnight. Overnight. It would also hurt Apple because a lot of people are very loyal to Netflix and they might go to be Android users or something, but I guarantee you it would hurt Netflix a lot more than it would hurt Apple. Apple, they're so big and powerful and they're so important to people that Netflix is kind of like a back burner to them. So I look at that and that is a risk. If one of the big carriers or somebody dropped Netflix from their service, it's a big factor out there. Let's move on. So now I'm done looking at the business. So far, I still really like it. That is kind of a risk about somebody dropping them as on their device or whatnot. If Apple said we're not going to have you on the App Store or Google, that's a risk. But so far, I really like the business because I don't see that being realistic and whatnot. So now we need to start looking at financials. I've decided I like this business so far. Let's look at these financials. On your screen, we have the last 5 years up there. Let's look at 2011. 2011, they had $3.2 billion in revenue. All these numbers are in thousands, by the way, so it looks like it says $3.2 million in revenue. That's actually $3.2 billion in revenue in 2011. Now let's go all the way over to 2015. They did $6.7 billion in revenue. So they've over doubled their revenue in the last 5 years. That's dang impressive, especially for a company of that size now. Now, if we're going to go down and look at the earnings per share, oh boy, this I do not like. They were earning 61 cents a share in 2011. In 2011, they were earning 61 cents a share. Now, in 2015, they have double the revenues, over double the revenues, and they're earning 29 cents. They're earning less than half of profits than they used to be, and they have double the revenues. So this is a real turnoff. I'm not going to throw it out yet. I'm still undecided about this one, but that is a big no-no in my opinion. I do not like that whatsoever. That's ugly. But let's go on to the next slide. So now what I want to look at how big their market cap is. I want to look at their PE. Now, most market caps over 100 billion, I'm not really very interested in. So if it was over 100 billion, I would probably say I'm not really into this one. They have 43 billion, so that is something I'm interested in. It's a small enough company that I would be interested in. Let's look at that PE. 319? 319? This stock's done. I'm not buying this stock at all. This stock is done. I'm just going to be honest with you guys. 319 PE. They're earning over double the revenues they used to be. Profits are half of what they used to be. I'm done with this. We'll just look at the balance sheet for the fun of it, just for the heck of it. Cash and cash equivalents in 2015, they got 1.8 billion. That's good. Short-term investments of 500 million. That's fantastic. That's 2.3 billion there. And unfortunately, they have 2.3 billion in long-term debt, and they have 2 billion in other liabilities. This stock is not a buy for me. It is not my stock. It's not up my alley. I hope everybody that's invested in Netflix has a great time and they make money. But for me, this is not the one. This is not the one. I would not rate this a buy. I would not buy this with my own money. No way, no how. That covers Netflix for the day, guys. Hopefully next week we can maybe get one that's a buy, but who knows? It could be a lot of no buys. We'll just have to see as time rolls on. Don't forget in that comment section to leave a stock that you guys would like to see broken down, and I will pick one lucky winner to break that down next week. If you like this video, give it a thumbs up. If you haven't subscribed, you may want to. I talk a ton about personal finance, talk about stock market related things like today, and I also talk about business and entrepreneurship. Thank you so much for watching, guys, and have a great day.